Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN. Shame on me. I got a little feedback there. We'll kick it off again. It's Thursday morning. It's 9:07 a.m., folks. We got 23 minutes to go until the opening bell, and it's shaping up to be quite a day in the markets, folks. And before we kick off the program, quite a day indeed. And, folks, if you want a good day for a live trading webinar, Larry Pesavento, he's kicking off his webinar right now, folks. He's in another trading room we have going on. And quite a day to do it. Let's jump over to the markets, folks. You want some action? How about the S&Ps down 32 points? How about the S&Ps down 115 points just in the last 72 hours from the highs that we had Monday trading days, 44.76. You're looking at a market right now negative by 32 points as we come into 43.62. Now, what's interesting here is staying on the S&Ps for a moment. We got all the markets in the negative right now. You have gold trading higher by about $9. We got the 10-year, before we jump away completely, trading at 134.12. That's correlating to a yield right now, jumping over. You're looking at a yield of 1.24%. Not really huge action on the 10-year when you think about all of this supposedly having to do with the minutes that came out yesterday. You jump back to the S&Ps. The acceleration begins 2 o'clock p.m. Eastern time. You're trading at 44.40. You trade down we were at 44.45 at 2 p.m. yesterday. You trade down 98 S&P points. We make a low, folks, of 43.47 at about 5:30 in the morning. Now, what's interesting here is jumping over to the SPY for a second. You take a look at the SPY. We're going to put the SPY on a daily, all right? Quite the trend channel that we're dealing with here. Now, we are just below basically this trend line, folks, and you can see this is going back all the way to November. We've touched this area on a couple occasions. I've talked about it many times, whether it was March, whether it was back in June, whether it was July. We trade down to that level before bouncing dramatically. I mean, recall that bounce in July, folks. You traded from on the SPYs almost 438 down to 421. And within the span of 5 trading days, you were back to 441. We'll see how it goes. Now, this bar has not included today's action yet, folks. We have the SPY trading right at about 436. You're literally going to open trading right at the lower boundary line. Interesting action. We'll see where we go from there. Back to a short-term time frame. Jumping around. Tech stocks trading lower as well. Got the NASDAQ 100 down about 0.6%. The S&Ps are down 0.7. You got the Dow down 0.8%. And as has been the case, the Russell continuing to lag, leading on the way down when markets are in negative territory. You get the Russell down 1.1% right now. Bitcoin, not too much volatility, hovering right at around 45,000. You're down $235 right now on Bitcoin. Gold catching a little bit of a bid, climbing towards the highs we had on Tuesday of 1797. Gold's trading at 1793.80 right now. Silver is up 2 pennies. We covered notes and bonds briefly. You got a little bit of a reprieve. Now, it's interesting action when you look. I mean, we're back to where we were on Monday on the 10-year. Meanwhile, the market has slid dramatically to negative prices since then, and we jump over to the VIX. As you'd expect, an elevated VIX in dramatic fashion, up to almost 25 overnight. We're currently sitting at 23.54 as the market pricing in some severe volatility as tapering looks to be a real concern going forward. And where are we going to kick things off, folks? We're going to kick things off with Larry Pesavento again. I encourage you, folks, a great day. Get in there. That's the last time I'm going to mention it because it's starting right now, 9 a.m. till 2 p.m. Eastern time. You couldn't ask for a better day when we get the VIX flying at 25. We get the S&Ps down 100-plus points from a couple days ago. We'll see if we catch a two-way market this morning, folks. We got negative action to kick things off. All right, let's talk about the Fed. Fed minutes show most officials see tapering starting this year. Excuse me, that is quite a statement, folks, and the market perks its head up. Most participants saw standard on price stability achieved. That's a tough one to argue with. I would say price stability is definitely achieved as we have markets that just go one way upwards and never pull back. So they released the minutes of the July meeting at 2 p.m. yesterday. This had to do with the July 27th to 28th meeting. And when you get into it, various participants commented that economic and financial conditions would likely warrant a reduction in the coming months. And then, of course, several others indicated, however, a reduction in the pace of the asset purchases was more likely to become appropriate early next year. So there's some divergent opinions in there, that's for sure. When you talk about some of the commentary and inflation in there, excuse me, while the recent surge in consumer prices has grabbed policymakers' attention, several meeting participants were still worried that inflation could slump back into pre-pandemic trend of running below 2% target. That's interesting, folks. They're actually worried that we might not have the type of inflation that they're gunning for, which is 2%. And the market takes notice, folks. Anytime they talk about tapering potentially this year, it is August. They start tapering those bond purchases, those mortgage-backed security purchases. And that's why it's surprising the 10-year really hasn't moved that much at all. Meanwhile, the markets are paying attention for sure. Continuing to slide down here. You had Bullard on Wednesday saying that he'd like to see tapering of asset purchases done by the first quarter of 2020. He's a little bit later to the party. The minutes indicate that officials see room for labor market improvement. Job gains have been strong. You're averaging 617,000 a month through July. Unemployment at 5.4%. Broader measures still show slack, though. Kind of correlates to what they're talking about for inflation. Employment to population ratio. This one's an interesting one here because you can't fudge it as much. Between 25 to 54. Was 77.8% last month compared to 80.5% at the start of 2020. So you're still almost 3% shy when you look at population to employment to population of the workforce age group, 25 to 44. Yeah, I mean, this is one you want to pay attention to, folks, in terms of the entirety of what's going on in this market paying attention. Fed officials cut their benchmark lending rate to 0 in March of 2020. $200 billion in mortgage-backed securities, $500 billion in treasuries. I mean, remember when these were getting announced? By December 2020, they realigned it. They're now doing $80 billion in treasuries, $40 billion in mortgage securities. Talking to friends last night, I mean, the numbers they're doing, you just can't wrap your head around them. Even as somebody that's got a finance degree that lives finance for a living, can't wrap your head around $120 billion in purchases on a monthly basis. And this is the quote, until substantial further progress is made towards its maximum employment and price stability goals. Now, maximum employment we are not at, not even close. Price stability, though, they're coming into. They think that we're probably there. And they're probably right on that one when you talk about price stability goals. Market, it's paying attention, but we're catching a little bit of a bid, folks. Check it out. We got weekly initial jobless claims we'll go over as well. That's a number that the market likes in terms of new pandemic era low. We're dealing with 348,000. That number out at 8:30. Stay tuned, folks. We'll be right back after the break.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get the S&Ps down 25 points right now. We get the Dow down 225 points right now. A little negative action extending the losses we had yesterday afternoon on those Fed minutes. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 11 a.m. Eastern time, live on the TD Ameritrade Network on Tiger TV. Kevin Hincks, Alex Coffey, and the team on Fast Market, breaking down the market action, walking you through hypothetical trades. Man, where do we start this morning? Kevin Hincks, good morning.
Good morning, Tommy. You know, we start this morning with a pretty risk-off posture. If you look, bonds are higher, gold is higher with the dollar being higher, and VIX is higher. But you've already got the Dow futures more than 100 points off their lows, so you've got a market starting to already settle in, Tommy. I think, you know, think about this. With the news that came out yesterday afternoon with the Fed minutes, that we talked about throughout the week, that some of this data was kind of stale. You know, 2 weeks ago is a long time in this market, especially right now. So the fact that some Fed members think the end of the year they should start to taper, several think it's early next year, that's still a long ways away. And I think the only person not talking about tapering is Jerome Powell, Tommy. And we'll probably get maybe some clarity out of him at Jackson Hole next week. But this is going to get interesting here, Tommy. But think about this. You've got good earnings out of Macy's, good earnings out of Kohl's, NVIDIA higher after pretty good earnings. You've got, make no mistake, some pretty high-profile headline news in terms of geopolitics that are pretty negative towards the U.S. So there's an overall sentiment here that you have to kind of fight through if you're looking for deals. And jobless claims this morning were good. Regional data out from Philly Fed, you know, regional from the East Coast, another big miss there, the lowest number of the year. But it's how you look at the overall economy here, Tommy, and that's what I think. You know, it's like some of the data that we're getting right now that takes a snapshot of the economy right now are actually fairly strong. It's that forward-looking data, the consumer sentiment, all the interpretation of how they see the future that may be softening a little bit, Tommy.
Yeah, it is interesting that they're buying the dip this morning, Kevin, for sure. S&P's down to 43.47, just like that. We're 20 points higher. Doesn't look as dramatic just because of the pullbacks we had. We're down almost 110 points from where we closed out Monday action. But each day we've had a little bit of a bounce. Yesterday, not so much, from 2 o'clock to 4 o'clock. But you're right, man. These earnings, and talk about, I mean, there's some lofty expectations, especially for companies like NVIDIA, man. They come in, you know, basically crushing the world in terms of trading from $115 in March. We were trading at $190 coming into earnings. We're positive $3 on their numbers last night. As you mentioned, Cisco, they're barely positive from 55.15. We're trading at 54.22. And yeah, retailers, man, Kohl's had some really strong, Macy's as well. Yep. Really strong numbers for some of these retailers. Macy's up more than $1 from 18 to 19. It is interesting. And then, of course, you know, I almost gloss over the initial jobless claims number, Kevin, almost at I think it was a pandemic low, right? 348,000 as we march on. So as you mentioned, Jackson Hole coming up with Chairman Powell. It'll be interesting, Kevin. Now, we know there's divergence on the board for the Fed in terms of, you know, you see the governors out there when they can, some professing a little bit sooner than others. I think he probably has the ammunition talking about Chairman Powell to say we're still data-driven because they like price stability is what I got from those minutes. But Chairman Powell likes to talk about maximum employment, right? And what I can't wrap my head around, man, is we're not even close to maximum employment in this market. If that's going to drive some of what the Fed's going to be looking at in terms of their accommodative policies, I should say.
There is still a lot of unknowns in this labor market going forward. Now, jobless claims at 348,000, that's a number, Tommy, if you think about it, pre-pandemic, good solid levels were about 220, 230 on jobless claims. So we're getting within 100,000 jobs, 100,000 claims of back to normal in terms of jobless claims. But you still get 10 million job openings, and you've got a labor force that's about to get their enhanced benefits. They're about to expire. So I think there's still a lot of dust up in the air. Jerome Powell's got every reason to be very patient, but just the mention of it has jitters in this market. But, you would think, Tommy, think about this. In a day after they talked about tapering, bond yields are moving to the downside. So that tells you all you need to know about what this market thinks about that right now.
I agree. It's a great point, man. No matter what. You look at a chart of the S&P right now, right? It's diving. You look at a chart of the 10-year. We're just kind of chopping around since Monday between 134.03, 134.17. You wouldn't even know if you looked at a chart of the 10-year right now, folks. Yeah, you had some movement yesterday, but nothing compared to what we saw in the market, for sure. So we talked about some of the equities, Kevin. We're going to have an interesting open with some of the earnings. I'm sure you guys got a plethora of things, whether we're talking Fed, whether we're talking about initial jobless claims. We still have earnings season going on. What are you going to be talking about on Fast Market coming up at 11 o'clock today?
3 stocks covering the gambit of the economy. We've got Applied Materials. We've got Foot Locker. Like Foley, you're going to do a presentation on Foot Locker, and then John Deere in the third segment. So we'll cover all parts of the economy today, Tommy.
You got your chips in AMAT, and then you go get your sneakers over there in Foot Locker, man, and then you go get your solid yard equipment over there in John Deere. Why not? Well, Kevin, man, we look forward to the conversation. We look forward to the education and the show as always, man. We'll be watching at 11 o'clock. You have yourself a great day, man.
Thanks for having me on, Tommy. Have a great day.
My pleasure. You too, Kevin. Folks, tune in every trading day. We're privileged to have the program on Tiger TV, 11 a.m. Eastern Time. Kevin Hincks, Alex Coffey, and the team. Outstanding show. I talk about it every day, folks. But, man, we got market action like we do right now. Always like to tune into that program. We got some good earnings season. So, as Kevin said, let's just jump around to some of those stocks that are out with their numbers this morning. We'll jump into it. Macy's, up more than $1. That's a big pop when you're talking about only an $18 stock. Now, let's see if I can find these ones. We got them all up here because I was ready. There's your Macy's headline. Earnings trounce estimates is how CNBC likes to put it. I usually like how CNBC, they love their quick clickbait, but nonetheless, they got some strong numbers out here. They're going to have $500 million stock buyback program. So much for being in trouble, right? They reinstated their dividend, approved a $500 million stock buyback program. The earnings, $1.29 versus 19 cents, and they take in $5.65 billion versus $5 billion expected. Folks, percentage-wise, that is a staggering beat. They're only supposed to take in $5 billion, and they took an extra $650 million in revenue in just 90 days. That is quite a number. Net income from the period, $345 million compared to a loss of $431. Now, a year ago is always going to be deceiving there. We talked about the net income numbers in a big way. Comp sales on owned plus licensed basis grew 62.2% a year ago. Again, not really a fair comparison, but the market was only looking for 41.1%. Now, percentages off small numbers can be deceiving. E-commerce sales down 6% from a year earlier. But again, a year earlier, everything was going on online. How about up 45% on a 2-year basis and accounted for 32% of net sales? That's the number I would hang on to for Macy's earnings, folks. If you said that Macy's was going to be pumping out $1 out of every $3 online, I don't know if I would have believed that a couple years ago. So they're making that transition. They got profits to show for it, and they're trading higher today. Now, taking a look at the 3-year weekly, you see the doldrums during COVID. We were hovering around the single digits for a while. We're right back to where we were coming into 2020, and we're going to open basically at 19 and change, kind of accelerating up to this high we had in July of 19. Stay tuned, folks. We'll be coming right back after the break.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and as we mentioned, markets catching a little bit of a bid. I mean, it doesn't look like much on this chart, folks, but you're talking about 22 points off the lows in the S&P. That's a solid 0.5%. Now, we're climbing right up to the highs we had at about 6 a.m., but you can see you back it up. Quite the decline. 44.76 Monday afternoon. You lose 120 points basically on the dot, down to 43.47. We'll call it 119 to be exact. And from there, we bounced a bit. You got markets open. You got the Dow down 216, 34,674. Tech stocks, though, holding up relatively well. 14,803 right now in the NASDAQ 100. And as we mentioned, so let's see how some of the stocks are opening that had earnings. We got Kohl's. We're going to jump over to them next. Really strong numbers. Surprised to see them negative, but when you get a lot of negative market action as well, that's going to weigh on it. We'll jump over to those. We covered Macy's, up about 5.7% right now, above $19. We're going to talk about NVIDIA. They're out with their numbers. You're trading up 1.7%. Cisco out with their numbers this morning. You're up about 0.5%. Strong numbers. You're seeing it right here. What we also got, we got Bath and Body Works out with the numbers. First time they're out with their numbers since they spun off Victoria's Secret. Now, I've talked about this one. It's been interesting. There's your spin-off. And since they spun off, you've seen a divergence. You've seen Victoria's Secret trade higher, as you've seen Bath and Body Works trade lower. You see that spin-off. Now, today I mentioned it because they're both out with their numbers, and you have contrary moves where we actually have Bath & Body Works trading higher, Victoria's Secret on the flip side down 7.5%, but you can see the run it's had from $48 almost when they split off to a higher 76. We're giving back some of those gains today to 7.8% in the negative. But look at this market, folks. Don't count it out. We got the S&Ps down just 15 points now, trading at 43.77. All right, jumping around to some of those companies with their numbers. We talked about Macy's. Let's talk about Kohl's. And these are big numbers, man. Getting into the numbers, $2.48 versus $1.21. They beat by more than 10% on revenue, $4.45 billion versus $4 billion expected. Net income, $382 million. Revenue rising 31%. Here's the one that really caught my eye on this. Full year earnings, they jack it up to $580 to $610 from an estimate of $380 to $420. Now, they already beat by $1.20. Okay, so the expectation for the year has to be raised by $1.20 almost, right? Because you got earnings that already for the quarter are locked in. But that's quite a big guidance on there. During the quarter, Kohl's repurchased almost $250 million of its stock, plans to buy back 500 to 700 million of its shares this year, up from 200 to 300 million, raised the net sales outlook for the year. It expects sales to grow at a low 20s%, up from mid to high teens. They got a lot going on in a big way, and nonetheless, though, I think they're still negative, which is quite a testament to the expectations for some of these retailers. Now, you take a look at Kohl's on a 3-year weekly, pretty similar to Macy's action, right? In terms of you dive lower, you spend basically March of last year through November when we get the efficacy numbers for the vaccines. You dart higher from 20 to 60. We've given back some of that. Surprised to see Kohl's in the negative with those numbers. Strong numbers, but not quite what the market was looking for. Macy's on the flip side, giving back some of it as well. I mean, yeah, you're positive, but you're only positive by about 4% from Macy's. And man, they had some really strong numbers in there. All right. As you saw, maybe the headline, I had Amazon up there. Interesting one from Amazon. So there is a report out there. I believe it's from the Journal. Where are we at? Let's see. Yes, Wall Street Journal. Amazon planning to open large retail locations that resemble department stores. Man, Amazon, they are just in everything, folks. I got some Amazon shares in my retirement account. In my opinion, long-term, folks, you can't go wrong. That doesn't mean you're not going to have some real volatility here. We take a look at Amazon. I mean, just in the last, since their last earnings, you were up at 37.73. You're back to 32.07. This thing had been consolidating since about 14 months ago, June of 2022. You rise above, maybe beginning of July, call it, rise above 3,000 for the first time. You chop around between 3,000 and 3,500. We're trading at 32.09. Now, the department stores they're talking about here, 30,000 square feet. They're going to kick things off with California and Ohio. That's about the size of a Kohl's. Interesting, we're just talking about it. Or a TJ Maxx to put it in context for you. And that's about a third of the size of a traditional department store. Probably talking about a Macy's or that like. So they're looking for Kohl's, TJ Maxx. That's plenty big enough, folks. One of the things that Macy's got in trouble for, right, was having too much square footage. Their stores are just so large when you got to pay for all that rent and you're competing with businesses that don't have the same overhead. Now, this is great how we're going to tie everything together here. Let me make sure I can find the article because, oh, come on. We talk about Macy's. No, here we go. Toys R Us. Speaking of making use of the square footage, right? Maybe this is how Macy's is going to make use of those huge department stores. Toys R Us is coming to more than 400 Macy's stores next year. I think this is a brilliant idea. A large assortment of Toys R Us merchandise is now available on the Macy's website. Toys R Us, of course, goes BK. They're trying to come out of that. And the way they're going to do it is they're going to have shops in shops. The Toys R Us shop in shops in Macy's will roll out next year. The company's announced Thursday a large assortment of Toys R Us merchandise now available. The toy business grew exponentially for Macy's in the past year. Our partnership allows Macy's to significantly expand our footprint in that category. They're going after the millennial mom is how somebody's putting it here. Who is that? The CEO said Thursday during a conference call, I guess. That's the CEO. When these younger parents visit Macy's to shop for toys for their children, they often additionally purchase other higher margin items. I mean, you could almost run that as a loss leader, I'm sure. You bring parents, you bring moms into the department store. Maybe they buy a toy at a very low margin, and on the way out, they buy some perfume, they buy a shirt, they buy whatever you're going to buy, right? Guys, the same way. Some of the margins on some of the products offered in there are probably much more substantial than the deals they're doing with Toys R Us. Toys R Us. But that's the type of innovation that they're going to need, folks, when you talk about making use of square footage for that type of size. You see, Amazon doesn't even want that much square footage. And think about the products that Amazon offers. Macy's, it's a brilliant idea to bring that into it as a way to drive traffic to their stores and then capitalize on that traffic as you try and sell the people higher margin items. Okay, let's jump around, continue the trend. We'll stay on earnings, and let's talk about Robinhood. Now, this one's an interesting one. Let's see how Robinhood's trading. Man, this market is just relentless, folks. Look at this. Let's put it back. I can't help but stay away from the S&P. You're talking about 33 points. We've now accelerated from the lows of 43.47. As I mentioned here, you take a look at the SPY. Folks, these channel lines, I mean, an ode to our man Bud Rolfs, the king of channel lines, folks. If you're not familiar, Bud was a host at TFNN, did an outstanding newsletter, a bunch of services. He taught me channel lines, folks. And, you know, this bottom channel line, all right, where you draw it, it's close. You know, you take it off the lows we had in November, all right. These troughs that we've had, though, really close to line it up. Now, yeah, we might be under that level right now. Where you put this thing is anyone's guess, all right? If you line it up to the lows that we had back in July, you're not quite to that level just yet, but you see we're coming right into that area. And again, we may catch a bid on the bottom level of this trend. And it's remarkable that you think about, we've been in this trend pushing 10 months, folks, 10 months in a trend that is basically 45 degrees straight to the upward side. Remarkable action on the SPYs, and we're catching a bid, and we're only negative 16 points, folks, and 16 points in the SPYs. You blink twice, and you might be in positive territory in no time. 43.7 in the 43.77, and let's see how the VIX is trading. VIX backing down to 22.41. We're going to talk about Robinhood and their crypto trading when we get back. Robinhood down 8.7%, but catching a little bit off the lows. They got some tough numbers, though. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The Funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps down 17 points right now. We got a chart of Robinhood up here. Robinhood down 9% on their numbers. We closed yesterday about $50. You dive down to 42.72. We're trading at 45.20 right now. Getting into the numbers. So big numbers on Robinhood, but a little bit of worry going forward here in terms of the revenue, the margins that they're making up. Revenue more than doubled in the second quarter, $565 million, bolstered by a massive surge in crypto trading. They're going to be like the crypto trading brokerage at this point. The numbers that worried, the company warned of a slowdown in trading activity would hit revenues in the current quarter. Investors may also be concerned whether volatile crypto can continue to provide such a tailwind. Robinhood was down 9%. Revenue surged 131% in the period, from $244 million a year ago. Okay, now the range they were looking for was 546 to 574, so it's near the higher range there. Revenue from crypto trading totaled almost $250 million, more than $250 million, $233 million, more than half of all the transaction-based revenue of $451 million for the second quarter. Think about that, folks. Cryptocurrency's share of revenue jumped to more than 51%. From 17% in the first quarter. They are making substantial margins for crypto traders over there in the way that they're running that business. More than 60% of the cumulative net funded accounts traded crypto in the quarter. 6 out of 10 accounts on Robinhood are trading crypto, folks. I don't blame them for the volatility you're getting. But man, is that a trend that you can rely on for future multiples that's going to continue? In the second quarter of 2020, crypto-based revenue was just $5 million. Okay, yeah, we're talking about $233 million. Don't even run the percentage on that one, folks, because that'll break your brain. It's a big one. Clients trading options contributed $165 million to transaction-based revenue, and equities were $52 million. Folks, if you're trading options, Thinkorswim is a sponsor. TD Ameritrade, they are a sponsor. I have opened a Robinhood account. You know, it's all the craze. I wanted to make sure we do a show. I wanted to be as informed as I could be. I wanted to experience the platform. It is not the platform you should be using to trade options, folks. It is just not the platform. The tools that they provide are nowhere near what Thinkorswim provides, and I'm sure a bunch of the other major brokerages as well, that they're just not up to par on some of those tools. What they are up to par for is providing crypto trading to anybody that wants it and capitalizing off of it. Equities only $52 million in there as well. For the 3 months ended September 30th, 2020, we expect seasonal headwinds and lower trading activity across the industry to result in lower revenues and considerably fewer new funded accounts than in the prior quarter. And as you'd expect, shares were lower. And you better pay attention on this one. I say you as an investors, because I don't envision that crypto is going to be crushing it. I mean, look at this chart, folks. Did things get a little bit ahead of themselves maybe in August? That is not strength in this chart, okay? You back it up to a 20-day hourly, no strength at all. You accelerate to $85, and since then it's been weakness across the board. You're trading lower again today. You jump over to the Analyze tab. You slide down. We're talking about a company valued at $37.6 billion right now, cut in half almost from that spike high you got last beginning of August, about 2 weeks ago now, August 4th for Robinhood. But I'd be wary of that equity, folks. Robinhood, they got a good thing going. They got a lot of accounts. I think they got, how many do they have in here? 200+ million active accounts, I believe the number was. Maybe they stated it in here. Not quite. Okay. They got a lot of accounts. But nonetheless, I'm not sure crypto is going to be the tool here. And there's going to be competition that comes in this, you know? I mean, you can't even trade most of the cryptos that they're trading on Robinhood on Thinkorswim, I don't think, right now. That's probably going to change, folks, if this continues. They're not going to be able to corner that market in crypto forever. Yes, they have a big chunk of it, but you're dealing with a company that is based on future valuations. You're talking about multiples upon multiples. And when it's all based on crypto trading revenue going from $5 million to $200 million on a yearly basis, Yeah, what do we get to be exact here? 233 million from 5 million. So be careful of that one in a big way. All right, what else we got going on? Let's take a look at the initial jobless claims, which we really haven't talked about yet today. We got so much going on. You have a pandemic low of 348,000. Now, what's interesting here is Kyle Quintanilla. No problem with him. Seems to be a reputable reporter. Not quite a fan of CNBC usually. But this is the stuff you really want to watch out for, folks, in terms of getting a little bit of a hot take, and I disagree with his analysis in this, and I guess this was a headline that he grabbed without quoting it. And here's how he reported it 3 minutes after. U.S. jobless claims dropped to 345,000, a pandemic low, evidence of strength for a rebounding economy and job market. That is quite a leap to make, folks, all right? Now, yes, that's a good number. As Kevin Hincks talked about it, even in a healthy economy, you're going to be pushing 200 to 250,000 jobs on a weekly basis. But first of all, this is a very volatile number week to week. Second of all, we got 9 million jobs to make up, something like that. We're losing 348 on a weekly basis for churn, okay? Evidence of strength for a rebounding economy and job market. No matter who put that headline together, no matter if it was him or anybody else, it's just irresponsible to make that leap, folks, on that number, all right? Is that a decent number? Is it in line with expectations? Could it be encouraging? Yes. Is it evidence of strength for a rebounding economy and job market? No. Capital N-O, period. But everybody's got a hot take, especially those working at CNBC. All right, let's jump around to some of the FANG stocks, see how we're trading. In this market, we're going to be green by the time I get off the air, folks. We'll see. I kid, but we're only negative by 6 points. Look at this S&P bar. We're trading right now at 43.88. You were down to 43.47. You're talking about 40 points in the S&Ps as we accelerate higher. Now, that's an hourly bar. Back to a 5-minute. You see the acceleration we're getting. Jumping over to the Dow, you're only negative by 75 points right now. You get the NASDAQ 100, only negative by 33. Let's check out the VIX this morning as the market surges higher. We're trading at 21.96. You jump over to crude. Crude, quite a negative session. You trade down to 62.66. We've bumped up $1 from there. You're still down $1.54 on the session. You get the gold contract giving back some of this the gains it had as the market has flipped around a bit. And we jump to notes and bonds. And as Kevin mentioned, not a lot of people, not a lot of action, not a lot of action in the 10-year compared to the action we've had in the market. And if you think there's going to be some massive shift in the sentiment of the Federal Reserve and how they're approaching stimulus, $80 billion in buying of treasuries, $40 billion in mortgage-backed securities, if you think that's coming like quicker than we thought, you'd probably expect to see a big move in the market in the 10-year. Now, yes, there's your action on the 10-year, okay? You've spiked from about 133.30 to 134.11, but all things considered, folks, we're trading basically for the week with a consolidation area between about 134.03 and 134.17, and we're right in the middle of that range on the 10-year right now. All right, let's check out some of those FANG stocks as we got the stock surging higher. We got Amazon back above 3,200 right now. Apple has been quite a juggernaut to the upside, but man, last couple of days we give back about $6. We're right now negative by 0.7% on Apple shares. Facebook right now negative by about 0.5%. Google shares negative by 0.6 as well. And let's check as we come into the final break on some of those stocks with earnings. We jump to Kohl's. Catching a little bit of a bid with the market. Kohl's back above 54. You're positive 4% right now. Macy's catching a bid. You're pushing almost $20. You're positive 10% on the dot on Macy's. Cisco shares. Look at these stocks, folks. It's a big one. Up 0.9%. Nvidia shares right now flat at $189.99. Stay tuned, folks. We'll be coming right back to finish up the program, see what else we have on tap for Thursday trading. I'll be right back, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, we got the S&Ps negative by 5 right now. NASDAQ negative by 33. They're buying the dip in the pre-market. All the markets still in the red right now, though, as we are about 25 minutes into trading. What else we got going on? I'm going to jump down the line quickly. We've talked about a lot of these stocks so far, but we got a couple we have not. Talking about stocks with earnings. Petco. Woof is their symbol. Petco beat estimates by 5 cents a share. Quarterly earnings of 25 cents a share. Revenue beat estimates as well, and they raised the full-year forecast. Woof. Petco. Trading higher by 3.8%. You're pulling back a bit. You're above $20 on their earnings. BJ's Wholesalers. Retailer beat estimates. Top and bottom line for the first quarter, 82 cents a share, 17 cents above estimates. Unexpected growth in same-store sales. It's just constant, folks. The numbers, they are strong numbers across the board. BJ's up 2% right now. We talked about Robinhood. Cisco we've talked about as well, but they were beat by 2 cents, earnings of 82 cents. Current quarter profit forecast fell shy of analyst estimates forecast due to supply chain issues. Now, Cisco, they were a little bit lower, but they've caught the bid. Check it out, up 0.7% even on their numbers. NVIDIA we talked about, they're positive by about 0.1% on their numbers right now as well. We went through Bath & Body Works and Victoria's Secret and Toyota. They're a little bit lower today, following a report by Japan's Nikkei News Service that Toyota would slash planned September production by 40%. 40% in the month. Watch out below, folks. Toyota down about 3%. Supply shortages in a big way. And Red Robin Gourmet Burgers, Red Robin, they are trading lower in a big way. Unexpected quarterly loss, lower than expected revenue. Red Robin, not quite crushing it. Is that it? Yes, it is. There you go. Down 20%. My goodness. Yeah, they were down on their numbers yesterday, and they're down again. And it's tough. When you got all your competitors beaten, and they are all beaten. Macy's, right? Kohl's, TJ Maxx yesterday. you're disappointed. You're going to pay the price, down 20% on some of these equities. All right, folks, stay tuned. We're going to have a replay this hour because Basil Chapman's out and Larry's not here today as well. You can still sign up for his webinar, folks. It will be archived. It's a great day to be in there for a live trading webinar. I'm going to jump in right after this webinar, this program. We got a two-way market, folks. We got the S&Ps down just 5 points. We got the VIX trading as well. I appreciate you tuning in to start my day, folks. Stay tuned. Fast Market at 11. Steve Rhodes at 1. Dave White at 2. Tom O'Brien, my dad, live from 3 till 4. Have a great Thursday, everybody.